Greetings, Dr. Cathie here, your social research scientist and redemptive change agent covering the world of creditworthiness, that is credit scoring systems and financial wellness and its impact on individuals, families, and societies with a passion to make a difference in this and future generations. Today, I just want to address very briefly the area of financial literacy. And so financial literacy within the world of creditworthiness is very important. As you'll see from this little presentation, financial literacy is an educational endeavor that's an education about money and personal finances and the knowledge and skills accompanied by behaviors and actions that meet the needs of an individual, a family, a business, or a community. Now, with the elements of creditworthiness in terms of financial literacy includes understanding and learning about budgeting, investing, and saving funds. I have a testimony here I'd like to share today by permission. And this started out with someone who in 2017 had no credit. They had no debt. They had no credit cards. They also had a low 600 credit score. They also didn't have many creditworthy assets, and they had, as I said, no credit whatsoever. They had a fear of credit and debt. Their understanding financial literacy was nil. They didn't want to understand it. They wanted no debt. If they couldn't afford it, they said, from clothing to cards, I'm not buying it. So they were shooing away credit cards. I don't want anything to do with it. Little did they know, because they did not understand the elements of building credit. So they had no understanding of they had no financial literacy. So in 2017, they finally decided, well, maybe I need to learn more about this. So in 2018, with a credit score of between 580, a poor credit score, which is between 580 and 669. They ventured out and had one credit card, but they had no other debt. They had limited credit-worthy accounts and assets. They had a cell phone for which they made a consistent payment. They owned an older vehicle. They owned an RV, and that's where they were comfortable. And then this person ran into some people that understood that maybe they should be looking at building some credit. This is called credit restoration. So when it comes to financial literacy, credit repair is one thing, but that's just a short-term solution to a longer-term issue. So credit restoration is like restoring one's health. In this sense, it's restoring one's credit health. And so they were able to connect with some service providers that provided credit restoration services as opposed to credit repair. Through this initial relationship, they were able to get one credit card. They had no other credit cards or other debt. They had, again, that low credit score of fair, and they still had these very few assets. They had limited creditworthy assets. In 2019, however, as they began to learn and develop a little financial literacy and understanding about credit cards and debt and needing to build credit, they started to get excited, and they went from a poor to a good credit score. And again, these definitions of poor and credit and very good and excellent are defined by FICO and credit financial institutions. This credit score left this person between 670 to 739. They had two credit cards now. They had no, however, with these two credit cards, they had no credit card debt or any other kind of debt. And they also continued to have limited credit-worthy accounts and assets. They still had a cell phone for which they made consistent payments. They owned an older vehicle and they owned an RV, but they were pretty excited and anticipated the fact that, wow, I might be building something here because I went from a poor to a good, poor to a fair to a good credit score. 2020, a year later, they went, because they were paying off that one credit card consistently, they went to, and then they obtained a second one, to a very good credit score, which is between 740 and 799. So in just 3 or 4 short years, relatively speaking, they're able to build credit by methodically and carefully managing their credit cards, the number of credit cards, and the debt that they had, which was paid off at they used it, and then they paid it off at the end of every cycle. So they continue to have no credit card debt. They demonstrated a positive payment history. critical. So never were late, always paid on time. In fact, the testimony is they always paid early. They made a purchase, they would pay it off within a couple, 3 days, a week. And so the credit that kept building the credit score. They still continue to have limited credit-worthy accounts and assets. Okay, that's 2020. And then they came back and said, you know, I still don't have a lot, but I'd like to consider getting a home. Well, by this time they had goals. They started aiming for something higher. And through the management of their credit cards and the debt ratio, which was paid off, so they didn't go over their limit, they were able to get a third credit card and apply for property mortgage. And they now had credit worthy assets, including their property and a home, in addition to their truck and their RV or the car or whatever vehicle they had at the time. So they went again from 2017 with no debt and no credit to 2021 through methodically building, through strategically understanding how to manage one's debt and build credit to be in a very, very good position. So in looking at the area of financial literacy, why care? This customer testimony I thought was a great example of why we do care, because they had something to aim for. So they came back in 2022, and they said between 2022 and 2023, they went up to that credit scoring level for which everyone would like to be, which was in the 800, which is excellent credit score. What had changed? What had changed for them? They were now considered to be low risk borrowers. They didn't borrow money at the end of, they always pay off the credit card debt before the end of the due cycle. They had the optimal between 3 and 5 credit cards, depending upon your income, of course. And so this person had 3 credit cards. By this time, they had 1 property mortgage, and they were successfully making payments on time and before time even. As they said, they had no credit card or other debt except for real estate property. So now they had, again, credit-worthy assets, including home and property and a vehicle. So this is the testimony, and the credit card payments were made before balances were due, phone and utilities were paid on time. So it's not just the credit cards, it's also how they manage their phones or utilities and any other debt, rent, if you rent at home, or your mortgage payment. So it's paying ahead of, on time or ahead of time, and being consistent and not being late, and then building and showing that you have a history of paying according to what's required to have good, not only good, but excellent credit. So I hope this little tutorial helped. Again, you want to make a distinction between credit restoration, where it takes time to work towards building your credit and getting yourself into a good financial stable situation, and credit repair, which means, well, I removed inaccurate data and I got some things off my credit, but that's not a long-term solution. So financial literacy is absolutely critical for those who are struggling with poor creditworthiness and struggling to try to find stability in either employment or housing or college or whatever it is that one's life is bringing their way. So tune in again, and thank you for joining us today. And again, think about credit restoration as a way to understand more about financial literacy, and join us again for a series on the value of creditworthiness.